Hello everyone, we are back after a hiatus. A cyber attack had disabled this YouTube platform of StratNews Global. But the good news is we are back. And coincidentally, this is also the 100th episode of Capital Calculus. To mark this milestone, we have done a special takeout on the union budget. The first part was recorded in the run-up to the presentation of the budget, and the second after the presentation of the budget. Happy viewing, and as always, please do share your feedback. Did you know that the Indian middle class is currently estimated at over 400 million? This cohort is projected to grow to 700 million by 2030-31 and to a staggering 1 billion by 2047. Did you know that the middle class today contributes to almost 50% of the incomes, savings and spendings in the Indian economy? Hello and welcome to another edition of Capital Calculus. I am your host Anil Padmanabhan. In less than a week from now, Finance Minister Nirmalasitharaman will rise to present what is her 7th consecutive budget and the first in the third tenure of the National Democratic Alliance, or the NDA. Given the overhang of social and economic pain points, as well as the setbacks suffered in the just concluded general election, it is safe to assume that the guiding theme for this year's budget playbook will be feel good. One cohort that is keenly looking forward to this eventuality is the middle class. For 2 terms, the middle class has been largely ignored by the NDA. This is ironic. The middle class is a key constituent politically for the NDA. At the same time, they are the biggest contributor for national economic well-being. So both numerically and politically, they have gained critical mass. Yet, this 400 million plus cohort is heavily taxed and facing shrinking economic freedoms. To understand this enigma, I spoke to Deepak Shenoy. He is the founder and CEO of Capital Mind. Deepak, among many things, is one of the foremost experts in personal finance and a very keen observer of India's ongoing economic and social transformation. I began by bringing to Deepak's attention a recent post on X by Mohandas Pai, the former CFO of Infi, faulting the government for ignoring the middle class.
There's a lot of angst about tax overall. This is because of 2 layers. There's been an increase in all sorts of taxes, visible taxes, to everybody over the last 10 years. This is particularly perhaps this government, but also the fact that you were at 30% top level taxes. When it called, say, top level, anything about 10 lakh rupees of income is charged at 30% tax. Now, over the course of the last 10 years, that percentage is no longer 30. It went from 30 to, if you're above a certain level, it has already become 33. There's no 30 anymore. It's still 33 plus a little bit. And then there was a cess, which used to be 1%, 2%. Now it's 4%. Then you have a 10% surcharge. Then you have a 15% surcharge, 25% surcharge. And there was a time in the middle where there was a 37% surcharge. So as you make more money, you're effectively giving a lot more money back to the government. There is this feeling that taxation is increasing across at least the literate enterprise. For even people in the rural areas, we're talking about an increase in GST. GST was earlier not as easily visible, and I say this because this is an unfortunate nature of the game. So what happens is, if you bought something for 100 rupees earlier, and there was at that time there was a service tax or there was a excise duty, but if you bought some good at 100 rupees, If it said 100 rupees, that was the MRP you were kind of paying for it, right? So, and but then on a if you're paying about 12% service tax or 18% service tax at some stages, uh, that has gotten replaced with GST. So now you find out, for instance, that there's a 28% GST on cars. Earlier, it was excise duty that was built in at the manufacturer level. You weren't actually seeing it meaningfully. Now you are. So there's a perception that, yeah, I'm paying a lot more taxes, while earlier it was hidden inside the ecosystem. I think there is this angst about, okay, you're charging a lot of tax, you're collecting a lot of money, and somehow we're not seeing the level of services that perhaps we should be, whether it's respect to the roads in the cities that we live in, the pollution in the air, the floods that seem to hit our cities no matter what we do, and even the villages. There is no always a problem with drought, and there's always a problem with too much rainfall. And is this meaningfully something that the government should actually be doing? Because the same bad weather exists in Singapore, for instance, or in other countries, and they don't seem to have so many problems. One day you'll see flooding in Dubai, but that got fixed very soon, and it's back to good. So infrastructure wise, are you getting what you want back? I think that angst remains. At some level, I also think that the government should, instead of taking away from people's pockets for itself, it should actually move the structure into leaving more in the pockets of people so they can spend and increase the economy. Because in the end, the government's getting extra money does not actually help the economy. It only helps them bridge some of their deficits. And this time, your some of the other nature of the revenues has helped them already. For dividends from RBI will be 100,000 crores. So why wouldn't you give a little relief to us? When the petrol prices the crude prices went up, the government also kept its taxes high. When the crude prices went down, the government increased its taxes, saying, "Oh, the benefit of the lower crude price should also accrue to the government." So we're paying the same price for petrol even when the crude price goes down. But when the crude price start going back up, the government says, "Oh, well, you know what? We can't reduce our taxes." But that doesn't make any sense. So if you're going to do something on one direction, you should do it on the other direction in terms of helping people as well. So in a sense, the government's actually eating a lot more taxes out of the incomes people make incrementally, compared to what it was earlier. I would wager that the economy will grow even stronger if the government were to reduce personal taxes, or not increase them meaningfully, to provide some kind of relief, because you've done that to corporates and you've seen the corporate increase in revenues, but you haven't done that for personal taxes. And I think over time, an emerging market like us requires our population to spend more. You can always, once you mature into a developed economy, then you can raise your tax structure a lot more.
So, Deepak, it's a very interesting point you made that one way of the government handling it is to raise resources through taxing this golden goose, which is the middle class. The other is you're saying instead of that, you tax less, give more leave more in the hands of the salaried people, and you have a consumption problem in the economy. So effectively, you kill two birds with one stone. You make the taxpayer happy, and at the same time, you boost consumption. Right?
Yes, I mean, India abhors consumption. I don't know why. We hate extravagant spending of money in weddings and by rich people. Why? It's their money. They would never spend it otherwise. They would keep it in some investments and buy some real estate. It's a waste of time. Instead, they're spending it on food. They're giving it to gardeners and food providers and garland providers, whatever you have. And this is a spreading of that wealth, right? And you should encourage more of this to happen in areas which don't have any development also. For instance, you go to a smaller city, they've done this to, say, Jamnagar, Tatas have done this to Jamshedpur. They've spent in those areas and they've built local economies that way. I think we should actually, because it's consumption that drives everything else, right? Whether it's manufacturing, capex, services, it is the hope of your products being consumed that leads to greater and greater investments.
If the middle class expanded, the salaried middle class grew, then the burden, you could argue for a reduction in rates. But you're not seeing that growth. You see, you're not seeing a trading up of across the board. The bottom of the pyramid is more, I mean, they have moved up, but they are nowhere near a situation where they could be, be in the tax paying bracket. They're still struggling. So I'm saying your overall economic numbers are very impressive, but when you look beneath the hood, there is a challenge there, which also contributes to the low tax base, which then kind of reinforces the argument that look, let's just keep targeting this golden goose.
At one level, I think they've changed the definition of golden goose, and maybe we are biased here because as a conversation, we qualify among those golden goose people, right? So we therefore feel a lot more of that misery. But if you think of just the per capita income in dollar terms, that's also gone up from 30,000-40,000 rupees a year, which was what people used to earn on average in India about 20 years ago, to about 1,80,000 rupees a year or something, which is about 2,000 plus dollars. So you've had a 3x increase in incomes on average across the population. Of this, take out some of the top 1% or so on, you would have still seen a significant increase in incomes even for others. But none of this comes close to the taxable bracket, which is $10,000, which is 7 lakhs. So even though you've got per capita income increases, it has to still go up 3x from here just to reach today's taxable brackets. And given the complexity of India's size, it almost costs more money to recover taxes from any direct income tax charge compared, which applies to maybe more than 20% of the population or 10% of the population. Right now, it means about 10% of the population is filing taxes, and only 1.5% of the population is paying direct taxes. But the GST is paid by everybody, and it's automatic. So it's like every merchant is automatically putting in the numbers. There are 4 lakh to 5 lakh people, so relatively easy to handle. You minute you grow beyond 10 crore people, the infrastructure required by the income tax departments increases exponentially. So what they've tried to do is reduce their work by saying, oh, up to 7 lakhs, nothing. That will eliminate half these people and so on. But per capita incomes haven't yet caught up to that level because per capita income does not have that driving force thing. Oh, I can't grow because I can't. I have to grow faster because the income tax people, otherwise will not be able to service this economy. But the idea over here has been that your driving force for keeping those high layers of levels of income before which no income is taxed has been driven by the fact that you don't want to spend the resource collecting smaller amounts of tax. Makes perfect sense. Because, oh, by the way, today, to give you an example of how crazy the system is, if you're in the new regime and you earn, I think, 25 to 27 lakhs per year individually, your effective tax rate is only about 15 or 16%. You have no deductions, but it's slabbed system. So up to 15 lakhs, you pay a certain amount. Above 15 to 25 is what you pay the 30% on. So you might pay only maybe 5 lakhs or something on a 25 or 26 lakh salary, which is actually a blended rate of a little bit less than 20%. If you look at India as a whole, tax collections, number of taxpayers to tax collections, and the average tax collected per person, that also yields only about 15%, 12 to 15%. This is direct taxes data that the government has released. So essentially, taxability of the individual has been driven by the fact that, listen, of all the people filing taxes, we should actually try to recover taxes only from 10 or 12% of them, because otherwise we don't have the resources. So to broad base it, what we have to say is we'll invest in the resources required to collect these taxes, sometimes automatically, which is why they probably introduced the TDS, by the way. That's another factor of discussion. But when you increase the collection footprint, if you may, or the size of the market that you will actually address and try to this thing, you'll have to change the systems also accordingly, because going from servicing a 10 crore population to servicing a 40 crore population is a leap forward in thinking.
We've gone over these growing burden on the salaried middle class, what we have called the golden goose, as far as tax purposes go. The middle class, generally, whether it's salaried or non salaried, are pretty independent. They don't need hand holding to make their way up uh, on the value chain of life, as it were. So, but increasingly we are seeing, because of measures like TCS, of course, the GST you talked about, but other, restrictions are being imposed at various stages. So the freedom that the middle class should be getting used to and should actually be growing for them is not happening. So this is a rather unhealthy trend, because the middle class is the dynamo of any economy in the world.
I think there is a lot to do, and from a focus of policy wise, it has never been to unburden the what we call common man. Because according to the government, the common man does not pay, is an agriculturist, does not pay tax, like you said, or pays hidden taxes in the form of GST, which we are not going to modify because anyway it's a state council thing. These are things that I think the government, if they change their stance, they change their view a little bit, it will be more favorably looked at from. I'm coming purely economically, not politically, because I just feel that people should feel comfortable in their lifestyles to be able to spend money, and the rich need to spend money on the marriages. The less rich need to spend money in their normal lives. Go tour the country, travel these fantastic roads that they've built for you. Don't let it only be for trucks. I drive to Goa every year, maybe once or twice. I drive a bunch of other places. The number of cars are still outnumbered by the number of trucks on the highway. Mostly because, other than in pockets, mostly because Indians don't like to drive on highways. We don't have infrastructure beyond just, I mean, we haven't even rationalized that. So it's like some of these places in the middle have nothing but that highway as their source of revenue. And they serve only truck drivers. They should be serving individuals, people who come there, restaurants, and so on. You find some interesting pockets somewhere in India, but that's simply because of a lack of knowledge and a lack of the ability to consume. Yeah, yes, you're selling more cars, but can you get those cars on the roads that were actually built for them, the highways, rather than inside within cities cramming and being in traffic jams?
Deepak has hit the nail on his head. Public policy largely perceives the middle class to be a primary source of tax revenue, the proverbial golden goose, as it were. While indeed this may be the case, it ignores the economic potential of this cohort. Numerically and politically, they are extremely powerful. And unlike other cohorts in the Indian economy, they don't need much hand holding. What they need is genuine ease of living. They can begin with access to basics like drinking water, 24/7 power, law and order, and so on. Yes, it will help if the finance minister leaves a little more in their pockets, especially since they drive consumption in the Indian economy. Once this is achieved, the force and the power of this cohort will be unleashed. Its intensity and potential is such that it is like a rising tide that will lift all boats. It is both a case of good economics as well as good politics. Fortnight ago, Finance Minister Nirmalasitharaman presented her record 7th budget and also the first in the third tenure of the National Democratic Alliance. Ignoring the temptation of populism, despite the electoral setback suffered in the 18 general election, the union budget turned out to be an essay in fiscal prudence. Unsurprisingly, the budget has met with mostly good press. To understand the social, economic and political implications underlying the budget, I spoke to Hasib Drabu. He's an economist and former finance minister of the erstwhile state of Jammu and Kashmir, and also a previous guest on the show. I began by asking Hasib if he was surprised that this budget was sans populism despite the electoral setback.
No, not surprised. When the Union Finance Minister presented the vote on account just ahead of the elections, and there were no populist measures, both on expenditure side or on the revenue side, and there were exemptions and or tax reductions, it reflected a certain confidence that the system had, the political party had, of coming back to power. And one assumed at that point of time that perhaps once BJP comes back to power, then you will see a more definitive kind of stand on fiscal prudence. But having come back to power, of course, and that too with a lower majority, what she has done, and that's perhaps the most remarkable aspect of this budget, is to refrain from any fiscal profligacy, reflects conviction in fiscal prudence. I think that's a big takeaway, and that should mark this budget, which will have an enduring impact in the budgetary history of India.
So, Asif, coming to the compulsions which you alluded to earlier, the fact that the BJP couldn't manage a majority on its own, how has this budget addressed these compulsions of coalition politics?
I think, honestly, when I looked at it a little more closely, I find the more on optics than on the impact on the budget of coalition partners. I mean, you see, no matter BJP has been weakened in this election in terms of its electoral numbers, but the overall presence of BJP in the states and as a party is strong. So I didn't think they were put in a corner by the coalition partners. So if you see, even the packages to Andhra are not actually budgetary allocations. And this takes you to a different point again, which is not being used so well in Indian union budgets, but is beginning to find a place, is this whole notion of leveraging money rather than allocating money. I think that's an important, it has happened earlier as well, but today you find that it has got a place in the mind of the finance ministry bureaucracy. That in the 60s, 70s, 80s, 90s, you would basically look at what I have, what I can borrow, what I can monetize, and I will spend that. Today, you have moved to a more, not exactly a corporate thing, but a more market-oriented thing, where you're saying, I will allocate what quote unquote can be equity, and then I can leverage that equity to raise money to fund my capital projects. Fundamentally, that's what has happened in both the packages, whether it's Andhra or Bihar. So you have not used budgetary money. You may have, of course, used some. Some of the allocation must have gone up. But I don't see that having distorted the budget.
So this leverage you're talking about in this instance is a template to use multilateral institutions like the World Bank, ADB, etc., to generate funds to finance development, right?
Yes. It could conceivably move to also getting involved with partnership with private sector, whereby you will have strategic investors, you'll have financial investors, and then you will have the contractors. So you'll have a whole bunch of, you're creating a new ecosystem where government is neither the dominant player nor the decisive player, but yet is an enabler and a catalyst to engender certain things. We've also seen that there's been no public-private investment. You see, one of the major things that happened, if you take this now as a 10-year period, or the Modi era, so to say, what has changed fundamentally in terms of the pure, I'm just looking at the budget. If you saw, the major change has been in the public expenditure policy. And of course, leave aside GST, which came in, but that's been historically a thing where you now see money coming out of years. But fundamentally, a public expenditure policy shift where you first 5, 6, 7, 8 years actually increase transfer payments to the system. If you go back and calculate, transfer payments total expenditure will be the highest in these 5 years, in whatever form they may take.
I see one mode of transfer payments that this government has cracked the code on is to use the Jandan Aadhaar Mobile JAM combo to target welfare spending. And they have given it a name called Labhartis or beneficiaries of social welfare. I was very struck that this year's budget speech, this, unlike the vote on account, this word was missing. How come?
Yeah, well, see, Anil, we have now, I think, work together on 20 budgets. The same thing, because, you don't find the word Labharti in this. This is exactly what my point was earlier. Is really the shift. Are we seeing a shift back to public investment in terms of an overall public expenditure strategy? That has gone down. So are you trying to revive that, but not revive it by fully funding it through your public investments of the Bakra Nangal variety, but in terms of trying to leverage resources from outside the system, giving confidence, giving equity, providing that so that you have. So you're right. You don't find the word Labharti in this, because I think that has been done, and now you're moving to a more investment oriented thing, which goes back perhaps to the 50s era, where the focus of budget was on public investments.
So I see this strategy to invest, which is primarily led by the government right now. India Inc. is yet to join the party in full force. There's another problem to it, the other side, which is consumption. The consumption levels have been pretty tepid, particularly after post-COVID era. I mean, it had been building up earlier, but it has become acute. So has this budget sought to address this problem? Have they sought to recalibrate from a pure investment led to a mix of the two?
No, I would still feel that this budget banks on consumption-led growth rather than investment-led growth at a basic level. But it is recognizing the limits to consumption-led growth, which is where investment comes in. And consumption-led growth means also that at the end of the day, when you invest, you also create incomes, right? But that's a long drawn process whereby the multiplier is allowed to work and hence growth is engendered. So yes, you can say it's a bit of both in terms of investment and consumption. But I don't see a distinctive thing which supports investment in a big way. There's an intent, but the numbers don't really show that. I would still feel that this again tries to revive consumption in a manner unlike in the past through entirely transfer payments. So I think there is that slight shift.
So, see, when you say that this budget attempted to revive consumption, are you referring to the direct tax giveaways where bulk of it was focused at the bottom, the people who have just joined the salaries or who just started earning? Are you referring to that?
Yes, even transfer payments still are very high. So those are consumption. You have not added to the Labharti business, but they continue as it is. The level has not been reduced, right? So that injection is there in the system as we speak. Also, it's not. There's no incremental gain in where the crisis is. I mean, the issue really is at the lower level. There cannot be a consumption crisis because, as very famously Karetsky said, that the rich earn what they spend and the poor spend what they earn, right? So it's like their marginal propensity to consume is very high. So you will certainly see that there's no issue there. The consumption issue is a middle class issue. You can see at the elite level, the corporate consumption, you have seen over the last 3-4 months, the extent of consumption that happens there. But it's a middle class issue. And middle class issue gets highlighted and exacerbated by the fact that the taxation burden is disproportionately borne by that middle class. And I would imagine this budget and the reactions to it, particularly the indexation and others, which I don't see as major, roadblocks, you will see that it will evolve over time. The issue will restrict it only to middle class consumption. So some reworking has to be done over the next 2-3 budgets of how to ease the burden of taxation on this particular class, which will automatically and axiomatically increase their consumption. So today we are facing a middle class consumption issue, not an underconsumption issue that we used to face in the 50s, where there was a genuine income constraint to consumption. Today we are different.
So did the FM miss a trick on the middle class, which is also a very important constituency for the BJP?
Well, no, I don't think she missed a trick because the trick was to be populist. So if she had done that, then she would have kind of, genuinely got into the act of populism. But what I do think is that going forward, we need to recognize the fact that the budget today, the union budget, is essentially an expenditure budget. It's not a budget for revenue side. And we have to work out modalities of how you want to do that on the expenditure side. Yes, in the Direct taxes still remains a part of it, but perhaps a new regime has to be worked out, as was worked out in the case of indirect taxes, which has made a systemic change. It's not that people are terribly happy with GST, but at least there is a certain sense that we are in the right direction as we go along. Another 3-4 years, three buckets, three things. You are seeing a more stable regime, a more formal economy. I think that kind of an intervention, what was done for the indirect taxes, needs to be done for the direct taxes. It should not be about rate changes and rationalization. It's a systemic change that requires to be done. And overall, in any economy that is growing, you will find that the direct taxes, indirect tax ratio has to be progressive. And that perhaps will lead the way of how to redesign the direct taxation, which reduces the burden on professional salaried this thing. Because the anomalies today are now growing.
See, Hasib, another aspect of this budget was it made a very important distinction between employment and employability. Basically, they flagged the challenge of skill. So, this earn while you learn. What are your thoughts on this?
I think that's perhaps the most important aspect of this budget, besides the balancing of its books. We have been looking at employment as an issue. Budget has no space in employment. It's a consequence of the decisions you take. It cannot and should not, in my opinion, directly address budgetary employment issues. Employment has to be a consequence. What has been done very clear, and that's, in fact, in my view, the highlight of the budget is focus on the employability. Today, you have segmented labor markets. You don't have one large uniform market across states and across industries, across sectors, across spaces. You don't have that. And there are regulatory regimes which are also affecting the entire dynamics of the labor market. You find pockets of huge demand for labor, but no required supply for labor. And this cuts across states. I've seen that in Gujarat. I've seen that in Orissa. I've seen that in Kashmir. A lot of places you find that there is pent-up demand for labor, and you find a lot of labor mobility across states to meet these pockets of demand and even out. So one key factor, perhaps more should be done on this theme, is to look at how do you create a skilled workforce which is in line with the new structure of the economy. So you have to recognize that between 50s and today, the structure of the economy has completely changed. So are we generating enough? Like I used to have this favorite thing in J&K. Why am I doing so many MBA in finances? There's one JK bank to get them jobs in J&K. Why can't I do MBA in horticulture management, which can accommodate 10,000 people? Because half my GDP is coming from horticulture and tourism. So why can't I do an MBA in tourism or MBA in creative design and artisans? Now you can find this kind of work which will really open up the markets, change the skill set of India, as it were, and automatically, the employment issue gets addressed. I keep saying this, and I've come back from J&K, where I spent 5 years as finance minister, 4 years, was essentially this whole issue about we have 14 lakh small enterprises, and they generate 28 lakh employment. It's a mom and pop show. One enterprise, 2 people. If you ensure a bit of credit, a bit of market intervention, and a bit of support, even if you do from 2 people to 3 people, you have generated 12 lakh jobs. 14 lakh enterprises, 4 people, you have solved the problem of employment in J&K. So it's as basic as that. And this whole focus on corporate Indiaing is a bit misplaced. We need to look at MSMEs, where at 40% of output generated, but has access to 18% credit. I mean, that is ridiculous. So we need to look at that regime, the formalization which was started with GST, where you want to formalize these enterprises by reverse charge mechanism, RCM. The whole intention was that. And once you grow to that phase, the banks will start lending to them, because you now maintain books, you have the full transaction, you have a trade account, you have current accounts, so you have a history, credit history, and that should prove. I think that's where the focus should be, and that will tie in very nicely with this whole employability issue. And you should see, and certainly corporates, and there are a few corporates who are actually doing this in the labor market, something like that would be worthwhile. Absolutely.
So, Asif, finally, besides this intervention you had alluded to, is there Anything that you would have done differently, especially given the fact that you're a former finance minister?
Only one thing, I mean, besides, of course, the matter of style, really. And I think one of the key issues that faces Indian economy, which has not been addressed adequately, in fact, at all, we have been focused on the gap that we face on the financial side. I mean, as a fiscal deficit, we are not looking at the resources deficit. That's been a huge thing for this economy, because at the end of the day, Indian economy, Indian corporates are commodity corporates. Look at the top 10 corporates in India, they're all commodity corporates. Their punt is on commodities, whether it's aluminum or oil or whatever it is, it's a commodity. And we are hugely resource deficit. We haven't had the foresight like China had to go and buy half of Africa to raise the resource availability of this budget starts an exercise on that. The whole minerals initiative that you found in this budget, plus the royalty thing that's come out from Supreme Court, seems now to be getting into an act where resources will get primacy. And these resources, again, are in states. So you are finding the resource-rich states becoming protectionists, as I mentioned earlier, and their growth has not been very good. If we can full-blown look at a resources deficit budget, which addresses that issue next time around, and she has started on that journey, and I just hope that she continues on that journey to ensure that the long-term growth sustainability of the economy is not jeopardized by either availability or the prices of commodities, which is what makes us very, very vulnerable today.
As Hasib pointed out, a standout feature of this year's union budget was its fiscal prudence, especially at a time when political parties in the run-up to state elections have been indulging in unbridled populism and then struggled to pay the bill once returned to power. At the same time, this budget also signals this government's intent to come up with out-of-the-box solutions to handle vexing challenges like, say, jobs generation. At the same time, this budget has legitimized the status of India Inc. as a stakeholder in the Indian economy. This is very important because in the past, India Inc. was always treated with an air of suspicion. Another matter that India Inc. continues to drag its feet on new investments. Net-net, this budget, put together in a hurry albeit, is part of a new building blocks that this government is creating for the Indian economy. The next budget should shed more light on this ambition. Thank you for watching. Don't forget to subscribe to Strat News Global on YouTube. Hit the bell icon so that you don't miss any updates. And please do share your thoughts, ideas and suggestions with us. I'm available on Twitter at Capital Calculus. I'll be back next week with another episode. Till then, stay safe.